Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Monday, November 6th. We're starting the first official week in November, although we did, obviously have a couple of days last week, but, first full week in November. Today is a Monday. We are obviously seeing some, flat equities, crypto, it's mostly up obviously from last Friday. But when we look at, weekly closes and daily closes from Sunday, obviously we're mostly flat or a little down, and that's not unusual for Monday. We do know Mondays are some of the worst days, told the TTC community. Probably better to approach things cautiously. Also, patterns lately have been sell-offs in the early US session, followed by some buybacks, in that midday turnaround. And then, hopefully we drift higher, but we are at the point where we could, see some sort of correction. We're going to get into, thesis around equities correlation and all that fun stuff. But let's go ahead and start with the TTC dashboard. Total crypto market cap 1.33 trillion. Obviously up slightly. Average daily sentiment across all cryptos neutral. ETH and BTC mostly neutral. I'd consider 46 is technically bearish and 55 is technically bullish, but pretty dead even neutral. ETH slightly up, Bitcoin slightly down. We'll talk about ETH BTC in a little bit. Some of these, similar coins that are still, up crazy amounts every single day. It is quite crazy, like BTU, Blur. A few of these coins have definitely, received some great price action recently. Hottest on Twitter, a bit mixed. Obviously, again, it is a Monday. Most bullish coins are performing mostly well. And we do have some bearish assets. Exchange net flows, nothing crazy on this one. ILV, definitely interesting. 1% of supply added to exchanges, down 7%. So, and then we got stablecoin exchange flows. So we did see a big withdrawal early this morning. This is pretty much right as markets open. So if you think about, putting in a withdrawal, over the weekend, it's going to get approved, Monday morning. So a lot of people did remove some stable coins, although overall stable coins are still up on, week over week, month over month, this in terms of being on exchanges. So definitely want to watch out for, big withdrawals like this. Obviously could have been a bit of an omen today for flat downside trading. So always good to track this on the TTC dashboard. So let's go ahead and head over to DXY. And obviously, if we get a quick peek at equities, obviously zooming higher, DXY zooming lower. We did talk about this support level, with the confluence of the 12-hour estimated 200 moving average. So this 104.6, 104.8 level definitely going to be very important. And again, coincides with these highs from back in May. So definitely want to monitor this level, because obviously if we pop higher and do some sort of deviation, that probably spells, either equities flats or equities down. And then obviously if we end up, moving lower and breaking down into this, that was, sorry, got clipped by my computer right there. This whole area right here is a whole nother range. As we can see, big range here. We had a deviation here. And then this could also be considered a deviation if we break back down into this range. So a lot of ways you can consider this, but the moral of the story is very critical level. We break back down, trend starts to shift. And if we break back up, then we stay on the bullish trend. Obviously, if DXY is heading down, I would assume risk is heading higher. And obviously, if DXY is pushing back up, risk is probably flat or lower, depending on the situation. So very, very important to watch this during the week. This will, probably give us some good indication of forward momentum as we push into November. Looking at equities, we talked about the 4,400 area a lot. We remember, back in mid-October, we, sold off at this level after obviously rising, and we are, sitting in this area where we closed, right around here on Friday, and opened very similarly on Sunday, but are just kind of stuck in this little area. And I will be honest with you, it does kind of look a bit like a double top as it stands now. So it would not shock me to see equities maybe pull back to 44 or 4,335. That's not a huge deal. You can still drop down to even 4,300 and still have, bullish market structure, because again, thinking about higher highs, lower lows, we've just been forming higher highs. we haven't really formed a higher low. Ideally, we did talk about this on Friday. We want to see, in a perfect world, we're forming a higher high, somewhere up in this area, and then we form a higher low, maybe around here, something like that. But we have to let the price action play out. And I don't think anybody would be excited to buy equities right here. So maybe we are going to get, a bit of a higher low before we end up forming a higher high. So there's a couple of ways to really interpret this chart, but I don't think there's a reason to start buying en masse right now. I think we can probably wait to see what the Monday, Tuesdays, or end of Monday, early Tuesday session brings. Remember, Tuesdays are generally a better day. So maybe we drip back lower, bounce here, or maybe, worst case scenario, drip back lower and then bounce here. And then we start to head up and break above this 4,400 area. And then we can start talking about moving all the way up into 4,450 or even 4,500, which is another kind of demand zone, very similar to the 4,400 area. So market's liking those nice round numbers. That is not just, for crypto. And if we also look at the 1 hour estimated 200 moving average, if we look at the 1 hour RSI, we do have some bear div here. So bearish divergence. RSI moving down, price moving up. So typically you would expect RSI to probably reset. If RSI is resetting, probably doing at least, one of these moves. So probably, nothing is guaranteed, and we are clearly in, some sort of lower time frame uptrend. And if we, basically the moral of the story is break below these lows right here, probably going to tag this level or at least this range before moving higher. So let's look at Bitcoin right now. Let's move over to the 1 hour. And as we can see here, flats-ish, but general trajectory still heading north. And so if we just kind of, higher lows, higher lows, higher lows, higher lows. So that's very good. But also very similar to equities, is we've got kind of this little ugly little double top. And this is technically just a range. You could look at this as, inverse head and shoulders or something. But to me right now, this is, under 35.3, no long, and above 34, no shorts, in my opinion. If you really wanted to be overzealous, if it breaks below 34.9, 34.8, maybe it goes down to 34. But why would you want to short that? That's not a clear short, in my opinion. So if you want to be patient, and because we could, still drip lower, maybe, shorters end up being rewarded. But to me, that's just not a play that is smart. I guess you do have defined risk with a stop up here. So if you really wanted to take that, you could, but there is no reason to be thinking bearish just yet with how things are structured right now. So the way that I'm looking at things is, and we don't even need any of the stuff, that none of those indicators really matter for how we're looking at things right now. So if we get above 35.3, we should ride that up to 36. And then if we can get above 36, we can start to talk about 37, maybe 38. And I've got, another key level up here at 39.6 that I don't think is unattainable, because, especially when we have this kind of consolidation, we could see another kind of springboard, very similar to what we saw here. And so, best to just track your levels and sell, or take some money off the table at the key level. So, basically above 35.3, get up to 6. If we reject at 36, you want to see 35 hold, and that should be able to propel us back up to 37. And then in a perfect world, we just flip 36 and zoom higher. But probably just the way that we've been trading is something like, I would say this would probably be a little bit more likely. So we, break above 35, tag 36, drop back to 35.3. And then, then we have one more, and then that's kind of because it's very similar to kind of how and if you kind of look at it, it gets a little bit, parabolic, right? So that's kind of what we want to see for a really nice uptrend, is consolidation and then kind of a parabolic move higher. So that's what I'm thinking for Bitcoin right now. But obviously in the worst case scenario, we start to drip towards 34. And then if 34 is broken, again, we discussed this all last week, we still have Monday's range that is yet to be formed. So actually I'm gonna move this up, and I'm actually gonna delete these because that's last week's range. So I'm gonna mark out the current range, which obviously could change. This is subject to change. So basically, we closed. Where do we close? So we closed here. So actually, Monday's high is sitting right here at 35,283. So I still think 35.3 is probably the more critical, like round number or whatever, but 35,283 is the high on the Binance USDT charts for the week currently for Monday. And then the low is down here at 34.726. So this is currently our Monday range. So, and if you remember last week, we basically, this was our Monday low right here. We stayed above that the entire time. And we have not dropped below it at all. So if we're kind of thinking the same way with the Monday range, then we definitely want to continue to hold 34.7, because obviously those are still, higher lows, right? We keep on moving up. And then the goal is to, very similarly, like I talked about equities, we want to form that higher high above 36, and our market structure continues to chop higher. So that obviously is the perfect world. If we break below the 34.7 area, we obviously have, some of these lows, some of these lows. We have the 1 hour estimated 200 moving average. So there's a lot of technical support there. But where things get tricky is that in the worst case scenario, we drop beneath these lows, market structure changes. So if we basically close below 33 or 33.2, that's when things really start to shift. But obviously no concern yet. But it is important to consider where you have to think about shifting your bias. So best case scenario, above 35.3, above 36, we're zooming higher. Worst case scenario is if we drop below 34.7. If we drop below it today, then obviously the new low for the week will change, and then we kind of have to look at things a little bit differently. But I think the most important areas are here. This low from Sunday evening and this low from Friday morning are going to be very important, because if we break below those, then this is the last area of support before market structure really starts to shift. So if we can hold 33, basically if we can kind of sweep this level, I'm going to start buying and longing very heavily again down here. When it's sitting there, I have no reason to really dive in anything until I see my key levels broken. We're just kind of sitting in the Monday range. I want to see what happens on a breakout or a break below. So same thing with ETH. Well, not the exact same thing. ETH has actually been a lot stronger. And as we can see, this was, very beautiful price action all throughout the weekend, 45-degree angle, maybe a TWAP. But if we look at the ETH BTC trend, remember I talked about this trend, and if we can just kind of ride this trend up and then get above 0.05537, we've got room to get up to 0.06. And if I even zoom out even farther, you can see how this downtrend has been affecting us. Maybe we can get, maybe we can bounce all the way back up to the downtrend, or at least close to it, which would be around 0.059, 0.06. And in that scenario, obviously ETH is outperforming Bitcoin. And so looks like a decent trade right now. So let's get rid of, let's look at this again. So, holding above yesterday's high, holding the trend. Yes, it can still do something like this and then, scoop back up. That would not be unusual. Basically, as long as we're just kind of riding this trend, whether it's, topsy-turvy, up and down, just as long as we've got a general 45-degree trajectory, that is good news. But it is important to consider we are reaching resistance, which is going to be this 0.05536 level. And RSI is beginning to become overbought, which last time it did not move too much higher. It deviated above resistance, and then we went lower. So that's also something very much to consider, is until we have a confirmed break above 055.3, I'm not betting the house on ETH. But if you are starting to allocate more to ETH, or you're tracking ETH or trades over Bitcoin, not the worst idea in the world, but it is important to consider where your resistance levels are and where your bias may need to shift, which is around this 0.05537 area. So let's go back to ETH and check it out. 4 hour does look fantastic. This definitely looks like it kind of wants to do one of these, and I'll let's get rid of these. Yeah. So this, I would say, it definitely looks like it wants to do one of these. But how many times have we also seen something like this, and then it immediately kind of shoots higher? So for me, there's no reason to get overly excited just yet. Although there is reason for some euphoria or some general excitement. When I say don't get overexcited, just means don't start betting the farm or allocating everything when we still could see some type of a pullback. But let's go ahead and draw our Monday range here. So obviously this is subject to change until Monday closes. But for now, these white lines are the Monday range. So for me, the way that I want to either add long, I did actually close some trades last night, so I'm not in really anything because Monday, the start to the week always scares me a little bit, especially after a pump. But what I'd like to see, and for bullish trades, is get above 1914, and then you pretty much have a war path up to $2,000. And really this demand zone between 218 and 230 is something that I've really got my eyes on. But we do have to remember that, the market does like nice round numbers. So very important to consider what may happen at that 2K level. And then in the worst case scenario is, we're kind of sitting mid-range right here. So maybe we drift back to the Monday low. We've seen plenty of Monday sweeps where, you sweep it, you jump right back into the range, and we are, just chilling. But it's also important to consider that, we were chilling in the Monday, or we were chilling in the weekly range last week pretty much the whole time. Remember, we jumped above on Thursday and then traded right back down into the lows on Friday. So the Monday range is always very important. And, there is a possibility where we see something like maybe we jump up to 1940, 1960. People get excited about longs. We do one of these. We drop right back to those lows. We're still forming higher lows, right? Because there's your low. You'd form a higher low here. And then that's kind of the springboard to 2K, so let me get rid of these just to give you kind of that idea, right? So this is literally exactly what it did last week. So if you call me crazy or whatever, this is exactly what happened last week. And we are now higher than where we were on those Friday lows. So, hanging around a little bit, jump up, drop back down, still keep, higher lows or equal lows, and then zoom higher. And that's exactly that same play, right? Chop a little bit, jump up, jump down, zoom higher. So don't, this type of price action, especially with this consolidation with no real clear dip, it's designed to chop you up. It's designed to make you doubt yourself. It's designed to induce max pain mentally. So what you have to do is really look at these fractals, play your Monday range, take things closely. I mean, unless you've got buys from lower, then you're just thinking about compounding, or you're chilling and you're watching me talk to people who, need, are looking for assistance with trading or whatever. But obviously, if you're lower, you're sitting comfy, there's no reason to worry. But if you haven't allocated yet, or maybe you close some trades like me and you're approaching things day by day, at least from a leverage trade perspective, because we've all got our spot bags that we are long, but really talking about kind of those day trades, those week trades right now, what I would really look for is there's no long for me until we get above 914. We do have to consider the possibility of kind of a sell-off early and then maybe re-long back here at those lows. And then if we sweep the Monday low, and then, if we sweep the Monday low, or at least drop back maybe to 1830 or 1850, and we kind of maintain wicks above this whole area right here, that's probably a pretty decent long opportunity as well. But it requires a sweep. It requires bouncing back into the Monday range. You can catch a falling knife all day if you want, but what I would prefer to do is see a falling knife, wait for some confirmation, and then jump back into the trade, because I'll miss, $5-10 on an entry, so that I don't have to stress, because technically it's going to be a lot more safe because we're busting back into that range, and that should bring some general excitement with it. So for me, there's really no reason to trade anything until we either break out of the Monday range lower or break out of the Monday range higher. That goes for both Bitcoin and Ethereum. And you can really look at it the same way for equities too. We obviously still have to form our Monday low for equities. With I would expect, expect this to probably go lower. You never know though; it's not guaranteed. So the best way to approach Monday trading is, it's always a little weird. Wait for the Monday range to form, trade, trade longs if it breaks north, trade shorts if it breaks south. And then any type of sweep, obviously trade that in the opposite direction. So there's really no red herrings, for the economic calendar. We do have a bunch of Fed governors, and Jerome Powell speaks again somewhere, at 9 a.m. on Wednesday, but he already spoke last week, and there's been no additional data other than the unemployment rate coming out, which actually was in their favor because the unemployment rate rose to 3.9% last week. So I don't expect anything weird. Initial jobless claims will be worth tracking because obviously that, parlays from last week's unemployment rate, which rose to 3.9%. We have some consumer sentiment, so maybe jobless claims, maybe consumer sentiment can throw some red herrings in. But we have seen pretty strong weekend price action so far, at least on crypto, and then worth at least paying attention because you never know what the heck Powell's going to say or how the market's going to interpret it. But just a heads up there. So for right now, things look positive, but again, red herrings look out for. DXY moving back into this range is bad for risk. Equities obviously dropping, probably breaking beneath 4250, going to be bad for risk, but still plenty of room up here for, a bounce to occur. Bitcoin breaking below 33, very bad for risk. And ETH, breaking below, you really have to get below the 1750 level. So ETH's got a lot of room. ETH does look very strong. I think this also puts a feather in the cap for altcoins. We've seen a lot of altcoins outperforming and performing very well. So I'm currently kind of looking for altcoins. But again, if you see Bitcoin break above this 35.3 level, then that kind of goes out of the window because then Bitcoin's outperforming and everything's going to kind of reset in terms of that cyclical nature of Bitcoin performing well, then altcoins performing well, then Bitcoin performing well, then altcoins, et cetera, et cetera. So with that being said, nothing clear right now. Wait for some price action to develop. Mark out your Monday range, mark out your key support levels, and focus on, bullish market structure, which requires higher lows like we've seen here, and then higher highs like we've seen here. We definitely do not want to form a lower high here. That could really change some things up. Doesn't look the most pretty right now on the 4-hour chart, but didn't look very pretty on Thursday and Friday either. And then we jumped right back higher and ran to the top of the range again. So that being said, if you're not in the TTC community, you're missing out on all the morning updates, trade ideas, trade call outs, market momentum, market structure updates, yada, yada, yada. If you'd like to be in there, www.tradethechain.com, get a 14-day free trial that gets you into the community, that gets you the data dashboard, that gets you everything you need. And we'd love to see you in there. So good luck and happy trading.